Hello and welcome to another update video about the DXY. The DXY continues to consolidate in the resistance area that we talked about already, well, a few times now in recent weeks. So the current wave count remains, acknowledged and is working out, and there's no need to change anything here. The idea is currently that the market topped in a B wave in September, or early October actually last year. We saw a 5-wave decline. We saw a corrective rally into resistance in what would be a wave 2. After we had 5 waves down in a wave 1, the rally is wave 2. The next move down would be a 3rd wave, basically a 3rd wave breakdown. Then we should get a wave 4 and a wave 5. To calculate a target for the 3rd wave down, we actually need a top in place for that wave 2. So the DXY is in an overall downtrend. That's the current assumption. It would need to be confirmed though, further obviously, with a break below that circle wave 1 low there. But if we calculate a target for the 3rd, I mean, again, I have to base it on some assumptions. For example, I could say that the 50% retracement level there, could be a target for the wave 2. Let's base it on that. I mean, if we say the wave 2 tops maybe at the 50% fib level at $104, then the 3rd wave down would be at $96, maybe even $95. That would be an ideal target range for that 3rd wave down. We should then see a wave 4 to the upside, which might reach roughly, let me put that onto the chart. We talk here then about just a pullback, basically a corrective rally, which might reach like $97, maybe even $98 as a corrective rally before we continue further our pathway down. And I've been saying for many months that I'm looking at a potential move down on the DXY, index, into the low $90 region. And it would work out quite nicely. Again, the wave 2 hasn't confirmed the top for us yet. So I'm talking about this structure here. The wave 2 hasn't confirmed the top for us yet. It has moved up a little bit. It's been consolidating in a very boring way. It's moved up a bit. It's consolidating again. Maybe it's going to do another move up, okay? And the next resistance is at 104. Then we've got 104.75. So these are sort of the next levels to watch there. And however, whatever we do, it's not really given us any clues that the corrective rally here, this wave 2, is over. So I'm still probably looking at a little higher until we minimally see a break below $102.75. That would be an initial indication that things might be changing, we might be coming down, but better would be a break below this swing low from the 5th of January. So I'm talking here about $101.90. If we get a break below that level, that would be even better evidence that things are starting to come down actually, okay? So until then, we have to keep the door open for higher. I don't have a very reliable microstructure here. Corrective structures are just far too messy and unpredictable. So we have to remain flexible here. Essentially what I'm waiting for or watching for, it's a first 5-wave move down, a small impulse down, maybe even wave 1 of 3 to confirm that this wave 2 has topped. But a small micro 5-wave move down would already suggest that this wave 2 has topped. There is structural resistance here around $104.30. So we have previous swing highs from the 16th of November, 22nd of November, here the 11th of December. Yeah, all of these swing highs, they might act as additional structural resistance. And so the area between the 50% retracement and the golden ratio, the 61.8 retracement, might act as additional strong resistance. We'll see. I mean, until the short-term trend is up now in a corrective rally, lots of overlapping price action though. And until we see a strong move down, the short-term door to the upside has to remain open. Doesn't look finished yet to the upside, doesn't look finished, just in the absence of any strong indicators that it's going down. I would probably look at a little higher. Next level is $104, as I said, and then these previously mentioned areas. Only above $105.88, I would have to adopt a more bullish stance, a more bullish perspective. Basically questioning the assumption here that a B wave topped already. if we break above that level and we see sort of impulsive price action, I would have to assume that this B wave is still unfolding, which at the moment is not what I primarily watch for, because the move down arguably is a 5-wave move. So if the move down is in 5 waves, typically, you know, I wouldn't say that this should be doing this, okay? Because this would be a B wave down. Now, again, that's to a degree subjective if it's a 5-wave move down, but I think we can agree that it looks like a 5-wave move down. But, you know, I might be wrong there. So that's why we have the Fibonacci levels. They tell us when the assumption needs to be revised. Not much more to add, so I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you are interested in daily updates about the S&P 500, as well as regular updates about stocks, then please check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.